following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Okay, folks, this is Larry Pesavento sitting in for the master himself. I feel like Ed McMahon today, folks. How do you replace Tom O'Brien? Totally impossible. Okay, we're going to start the day by looking at the Hang Seng Index because, as most of you know who I am, hopefully you do. If you don't, you're lucky. You can tune me out right away. However, let's take a look at what the Hang Seng has done. Folks, look at that bottom in August. Can you believe that's when the rioting started in Hong Kong, right at the bottom of August, and it rallies all the way through January in the midst of terrorist acts every day. And they call them protesters, but when you throw Molotov cocktails, at least I call them terrorists. But anyway, we've completed what we call a Gartley pattern. It's a perfect ABCD pattern, as you can see by the little purple triangles that are there. It stops at the 78% level, which is the square root of 0.618. And now what we want to do is we want to take a look, go around the horn here and see what's happening across the globe. First, we'll go over to Germany, one of our big competitors, especially in the automobile business. And if you take a look at the German DAX, you'll notice that we've had a big move here in early January, but we topped on the 10th of January, and then we moved down, and so far we haven't really gone anywhere. It hasn't really followed through like what we've done here in the United States. Remember that July 10th, because we're going to get back to that in just a little bit. And then if we go just a little bit, move about 700-800 miles, or would it be 1,000 kilometers over there, we're going to take a look at the FTSE over here in London. And here again, you're going to see the same ABCD format from the low in October and to the high that we made here in early January, also around the 10th. Now, the reason why the 10th is important here, and since I have a captive audience today, I want to go over why I made this prediction that I made that the market was going to have a very big move coming in on the 10th of January. And just let me show you what we have here. Here's the bottom of the stock market, folks. What you're looking at here, this is what we call a natal chart. These are the planets that are up here at the top. You can see there's 6 degrees, 6 planets at 0 degrees. They're all basically in 2 houses. You can see all the spaces around the place. I mean, that means there's a lot of things happening. They're lined up like bowling pins, basically at 0 degrees, which means conjunction, and that usually means that there's something big going to happen. Well, on March the 5th, the market bottomed at 666 in the S&P and at 6,400 in the Dow Jones Industrial Average, which happened to be an exact, oh my gosh, to the 0.001% of the low that was made on August the 19th, October the 19th of 1987. That low was exactly 61% retracement of the low on August the 9th of 1982. All of those were with this type of a pattern occurring. So what I was thinking, and my thinking so far has certainly been wrong, but because we were looking at pretty much the same thing, if you'll look at this, this happens to be the situation where we were on the 10th, and we had 5 planets at 0 degrees, and they extended all the way out until the 13th, which was Monday. And here we are on Thursday making new highs. Folks, this thing has never been more than 3 days off. In all the samples that I looked at, and of course there's only been 7 of them in the 60 and 70 years, so it's been a relatively small sample size. This is certainly not working. Let me just give you an example Well, first of all, let me show you the 2009 when I first started. I started doing the show here in late 2007 when Ed Young passed away. But you can see here, there's the bottom in the market. You can see the 3 drive to a bottom pattern. You'll notice on the far right-hand corner where it says 7,000, as we came into the week, we dropped another 4 points to get us down to 6440. That was the low in the Dow Jones on the 5th of March, and then we rallied. I mentioned that that was going to be the biggest rally that the stock market would have since 1938, which was a huge move. I didn't know it was going to go from, and it's still going, 29,200 from 6,400. But that's the type of pattern that I was looking at. The red line is a Bradley model that basically measures the volatility, not the volatility, but the strength of these cycles that we're looking at. Just to give you an example, here is the one from 1987 when the market topped on August the 25th. Again, you can see there are 5 planets all lined up together. That was it. They all lined up exactly that day. And then the market broke down into September, rallied up into October 2nd. And from October 2nd to October 19th, the Dow Jones dropped about 35%, losing 22% on the 19th of October of that year that most people don't realize. But let me show you the big one. This is the one that really got me interested in cycles many, many years ago when I was doing graduate work back in Indiana. Let's just pull this up. This is from that book that I wrote, Astro Cycles, A Trader's Viewpoint. This is the chart that you're looking up here. You can see the Dow Jones at 580 there. Basically the same thing. You see that black arrow with all the little planets lined up. You see how they all lined up here? Well, that particular year, 1974, we had that was called the crash of 74. We had a double bottom. We had one in October. This is the one in October. You'll see that there was 10 days apart on all of these. I don't know if it's going to be 10 days this year or not, but anyway, there were 10 days here, and there were also 6 days in December where it made the double bottom. And that's what made the market move. We went from 580 there, and we're still going up. So that's what I'm looking at. I don't know if it's going to mean very much or not. All I know is I'm paying attention here. There is no bearishness in the market at all. There's absolutely zero fear. I mean, none. And we had a caller in my show today that mentioned that Isaac Newton's law of motion, the first law of motion, what goes up must come down. And unfortunately, so far, poor Isaac has been wrong. But maybe they'll catch up with him one of these days. But whether they do or not, I'm not really sure. But I do want to bring your alert here because I won't see you guys again because of Tom's show, but I want to alert you to a cycle that's going to happen here on March the 20th, which is 2 days from 1 day from the equinox. You'll notice here that we have all of these planets lined up in 3 houses. You can see all the rest of them are almost blank. You got to pay attention to that date, folks. That's March the 20th. Of course, if you'd have paid attention to the date of the 13th, you would have been still trying to suck eggs because this darn thing keeps going higher and higher and higher. How much higher? I don't really know, but, we'll find out eventually. We'll have to pay close attention to it. We're going to take a little break here. 877-927-6648.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. This is Larry Pesavento setting in for Tom O'Brien today, and I posted the chart of the most heavily shorted stock on the New York Stock Exchange. Those boys really like to follow the trend on this one. Even I haven't done that one. The reason why I posted it, I found out today that it was the most heavily shorted stock. Mr. Musk is out there dancing because he should be dancing. By golly, the guy's been right, and he certainly has been paid big dividends, and I wish him the very best of luck. But this stock has been shorted. The reason why I bring it to your attention is, if you'll notice the pattern that is there, you'll see the 1.618 expansion. That came in at $544 a share. And if you double check, you'll believe it or not, it was within $1 or $2 of the exact high of Tesla so far. Now, this is just a $40 correction, really not very much. So we'll see. What's that, about 8% or something? And well, it was happened in one day. That's the main thing. But we'll see. If it happened in one day, we'll see what happens to it from that level. But it is the most heavily shorted stock. And one of the reasons, folks, behind that is, I'll bring this up to show you. This comes from our good friend Rich Anderson over at Anderson Capital Management, and this shows the number of IPOs that are losing money. You'll notice that the dot-com bubble there in March of 2000, they were many of them were still losing money, but you can see here most of these dot-com companies are still losing money. That's usually not a good sign, but again, signs can be interpreted any way you want them. I'm just going to give you some ideas of what you're looking at. The other one that is hasn't made new highs yet, but we're very, very close with the strength that we're having today. We probably will do it tomorrow. And that is, if we take a look here at the Russell Index, the Russell 2000, the small caps, you can see where we were in 2000. You can see where we are. This is growth versus value. And we have not made new highs yet in the Russell. We had a big, strong move in the Russell today, so that probably means we're going up to make even higher highs. And we're making higher highs as we speak, as the market continues to charge ahead. We just hit 3310 in the S&P S&P 500. We're trading at 91.11 in the NASDAQ, and the Dow Jones is up about 200 points. So things are looking pretty good in stocks today, even though the volume is rather sparse, as David White reported on the previous show. All right, now, given that information, what we have to decide now is what we think is going to happen next. Well, we've got a holiday, and remember, the day before a holiday has a 70% chance of closing higher. So being a Friday, and Friday in an up week, who's going to short it in an up week like this? Maybe the guys that shorted Tesla. I certainly am not. You know, I gave up the ghost. I tried it on the 10th. And then on Tuesday, when the market was making new highs, I realized that something was wrong, and so I decided to took a very, very small loss, about 10 points in the S&P, which a market that's moving that fast isn't very much. So I will wait till I see another pattern that allows me to enter the trade without very much risk. That's what pattern recognition is about. It's not about prediction. It's about how much money do you have to risk. And when you're looking at certain patterns, you expect them to fulfill the way they're supposed to, and if they don't, then you know you're wrong. So since you're here today, we have something really exciting happening here we've been waiting for in stocks for a very long time. I'm going to bring this up here. The alarms went off today, and we finally reached our price down here at 16.22. This is the ETF for natural gas. Well, we've been waiting on this for a very long time. We've been almost a month and a half right now. So we're down at this level right here in natural gas at 16.22. Folks, you only have to risk about 30 cents on this. If it goes below 15.90, you're most probably going to be wrong, and you want to stand aside. So the first thing you'd want to be doing is, if you're going to buy an ETF, is to go and take a look at the underlying value that they have the ETF for. So we're going to look here at the natural gas contract on a daily basis. And as you can see, we're almost at a double bottom. That goes way back to August. That comes in around 204. So that gives you a little leeway here to buy that. If you can buy the UNG either tomorrow or Monday, as long as it stays above 1592, you have a very, very low risk threshold. Now, will it work or not? No, but we're assuming that it's going to be a double bottom. Now, that's an assumption that we're making by just looking at the patterns. If you look at this natural gas contract on a daily basis, you'll notice that from August to September, we had a huge rally down into October, and then up in November. You'll see the ABCD pattern in red there. That's the standard of what we do in technical analysis. That comes right out of the H.M. Gartley book, Profits in the Stock Market, from 1937. That book cost $1,500 in 1937, folks. That was a cost of 3 Ford automobiles. You could buy a really nice Ford, color black, for about $500. And from there, we went from 291 to where we are now at 207. So we're going to be, in fact, we'll be a little bit lower that tomorrow, I would believe. We'll be watching this bottom here at around 204. Now, this market did trade below 191 last year at some particular level. So we're just looking to see if this is going to work or not. Do we know whether it's going to work or not? Absolutely not. You never know that. In the risk-reward equation, the only thing that you can control is the amount of risk that you have. That's the key. Now, we had a caller was able to squeak through on that busy line. I don't know how he got through, Al. Honest to God, you're a musician. But he wanted to know about the volatility index. So we're going to bring this UVXY. I think it's one of those double-weighted. I don't do these, so I'm not sure, but we'll bring it up here. And you'll see here we're trading at around 1061 here. This is what we call a downtrend, folks. You can see December of last year when the stock market was in the sewer, and the market rallied all the way up to 95, and here we are just slightly lower, about 85%, down at 1061. There is very low risk on this particular one because if you buy it here at 1061, in fact, the market is actually holding up relatively well today with new highs. You don't have to risk more than $0.50. I am not recommending this. I do believe that volatility for 2020 is going to be bigger than anything we've seen in the last 4 or 5 years. I say that just because of looking at the patterns and the fact that the greed index is almost at 135%. Actually, it's closer to 95%. But it hasn't been this big since the top of 2008, October 2008. That was October 7th, the 7th of October. 7th of October, 2007, and also in the dot-com bubble. The dot-com bubble, folks, was a once-in-a-generation thing. Those of you that were around, that was 20 years ago, but that was, you didn't even have to, all you had to put .com in the name, and it started to double every day. That was the craziness that we had, but that all ended in March of 2000, and then the NASDAQ gave back 90% of its value. Now, there's impossible that the market could sell off from these levels, but impossible things have happened because things that go up have a tendency to go down. At least that's what Isaac Newton said when he looked at his 3 laws of motion that he used to talk about. All right, another one that I think that we should pay attention to here in the markets is to what? Oh, we'll take a break here. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market, Basil Chapman at noon with the Tiger Technicians Hour, Steve Rhodes hosts the Trader's Edge at 1 p.m., Dave White with the Power Trading Hour at 2 p.m., and Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien today. Tom will be back with us tomorrow, I believe. Let's take a look here at the U.S. dollar index. Very important that we watch this because it's what moves the markets, especially in foreign exchange. The U.S. dollar index is 53% the value of the euro, followed by the Japanese yen, then British pound, renminbi, Chinese renminbi, which will be moving higher, of course, once it gets more and more popular as these trade tariffs are worked out that we have going on in the markets. I think that's been pretty much put in the market for quite a while. Right now, we're going to be in the impeachment area, and I'm going to spend the next segment here at TFNN. I know Tom doesn't like this, but we're going to discuss politics. So prepare, get your notebooks out, folks. Are you ready? There's going to be an election in November, on November the 8th. That's the end of the segment on politics today, folks. I hope you enjoyed it. Let's move on here and take a look at the next one that's everybody sort of watches, and that is the old yellow metal, the gold market. This is the daily chart. I've posted the weekly chart so many times for my servers or my subscribers at Fibonacci 24/7 that I didn't want to do it again. But if you'll notice that 786 on the weekly up there, that number was at 1608. The high that day was 1613. That was the night that they were doing the fighting over there in Iraq. It lasted a little over an hour, I guess. The market went from 1613 all the way down to 1538, and so far we've been able to rally up to about 1563, 1565, and now we're trading at about 1551. Folks, there's a very strong possibility that gold has topped here, and the reason why here is that the high that we made on that day this last Sunday was exactly, I mean, to the tick of 61% retracement of the high from the original high going back to August 11th of 2011 when gold was trading at 1932, went all the way down to $1,000 an ounce back in December 2 years ago, 1,030. We've rallied up to 1611, and that was exactly within $2 of the exact number. And it wasn't there, folks, at the blink of an eye. I mean, the number of trades that happened between 1580 and 1610 were very, very few. It was very, very fast. It was straight up and straight down. I happened to be watching it that night because I like to trade gold. I wasn't fortunate enough to get short at that level. I was able to get it off a little bit later, but it was a beautiful pattern, and that really means something because that pattern that you're looking at there in gold is known as the hanging man pattern. And when you see that, that's the shooting star pattern. And when you see that, that is usually quite bearish. That means the market is way up and then closes way down, and on huge volume, folks. Big volume on that day. There wasn't much volume at the very top, but there was a lot of volume, on the way down. So that was telling you what's been happening. Now, however, if this gold can hold the 1540 level, and I'm not saying that it is, I'm not saying that it isn't, but if it can hold 1540, then we've got a chance here, for the market to turn and go higher. We had a major, what we think is a major completion in the pattern for platinum today. We've been waiting for the market to get up to, let's see if I still have that chart in here that I had for this morning. I don't know whether I do or not. I might have. Yeah, here we go. We'll bring it up here. This was our target that we were looking for in platinum. As you can see, it was around 1040. We got to 1046, and we traded down. We dropped about $40 an ounce today in platinum, closing down at 1005 per ounce, and that's where we're trading at right now. So that's why that was important. Now we are also seeing, silver is not doing very well either. When you see the precious metals, you look at gold first, then silver, and then platinum. Platinum is, the least volatile and the least open interest of those. Gold is 6 times the open interest that we have in silver, and platinum is a fraction of what silver is. So you can see the difference in these markets that you get a lot of different players. And it doesn't take a lot to move that platinum market, but when it moves, it really moves. But we hit a major ABCD pattern up there today, so it's important that we, sort of pay attention to what we're looking at. Now, we just shooting up here in the S&P up here to 1313. That's a pretty big move. The NASDAQ is moving up another 10 points from where we were just a little while ago at 91.16. So we're having a lot of buying here coming in. So the folks that have missed the move so far are able to get in. The open interest in the E-minis has been going up. Last night, I checked the open interest, and it moved substantially higher in all of those indices. So that was telling us that, yes, they are going higher, and they continue to go higher. How much higher, I don't know, but we've got a Friday and an up week, a day before a holiday, so it's going to be really hard for statisticians to go short the market tomorrow. It might take something of a geopolitical nature of some kind, and then we will, whether that might do it, but it's really statistically positive for tomorrow. So we need to pay, very, very close attention to that. It's extremely important, as near as I can tell, just by looking at these as we see them unfold. So that's what we're looking at with 33.12 on the S&P. I thought the high today would be 33.11, and we've gone through that substantially, and we're still going higher in the last half hour of trading, which is usually indicative of a trend that just keeps on going, and that's certainly what's going on today. Someone dropped me a little note here. How much higher do you think the market can go? It's going to go until it's finished, and then when it's finished, it's going to go down. That's all I can know for sure, because by golly, you just can't stand in front of a freight train like this, folks. There's just too much buying coming into it, and believe me, the pattern looked really bearish coming into the 10th and the 13th between Friday and Sunday. But when you come in Monday morning and you should have turned and you didn't turn, that was the first sign that something was wrong. We had a lunar eclipse and a full moon on the day that the market made its the top that we were looking at, which was at 32.55. Folks, we're 62 points higher in 4 days. I mean, that tells you the market is extremely strong. You just have to wait until it's over. When it's over, it's going to tell you. And you'll know, because this volatility is going to get really rocking and rolling, because markets that go straight up like this, they have a tendency to turn around and scare you. So just be really, really careful. It reminds me of I better not tell that joke. I better tell it. Maybe you folks at TFNN here don't get to hear many jokes from Mr. O'Brien. I know he's got a great sense of humor, but I'm not going to do that because I'll probably get bad vibes. So I'm not going to talk too much about it. Let's move on here and talk about one other thing that most of you take a look at, and that is the Treasury bond market. Because this is a market that is extremely bearish, folks. I know you hear stuff about the Fed's going to do this and the Fed's going to do that, but you can see here we topped here back in August and September. That number was nothing more than a retracement from the high we made a year and a half ago when bonds topped at 177. And I hear the story of zero interest rates, negative interest rates. That defies all description of what I've ever believed in. But as you can see, this downtrending line here at around 160. We'll be right back. We'll play a few bills. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien, and I wanted to re-examine this chart of UNZ because, you know, we just hit that level that we were looking at, which was at 1622, but here you have a situation that we've talked about several times since we've been on the air. Here you have a market coming in on a Friday before a holiday, and it's below that level right now. They're silly to buy it this late in the day, so you want to wait to see what's going to happen on Friday. If the market should, turn down, which is highly unlikely, but then you want to watch this for Monday morning. That's what I would be watching. That's when we'd be watching this natural gas futures to get down to that 204 level, which would make the double bottom. That would be the strategy that you want to look at. I posted the UNG because that's the way some people like to trade this. It's a very, very active ETF, and it certainly makes a lot of sense to do that. So we'll see that. I want to thank SM in the room here for posting the Fear and Greed Index that Dennis Gartman always posted. So it's really high. I haven't seen that for a very long period of time. One other chart that is interesting that Dennis posted is from one of his, it's actually from the Board of Governors from the Federal Reserve. It shows this quantitative easing. You can see what's happened here since late 2019, how the Fed has been pumping money into the system to the tune of about $3 trillion. And a lot of that, of course, has gone into stocks and risk-type assets. But what I watch when you hear risk assets and things, one of the things that, that really tells you where the money's going in the foreign exchange markets is the dollar versus the yen. And if we take a look at this, this was as of Sunday, folks, and we did get down to this 91.20 level. We took it out by just a little bit, and we have not moved here at all. We've been down here all week, and it just hasn't moved. This is not telling you that people are willing to take risks here. There are people that are a little scared at this point just by looking at that Japanese yen. Whether that's going to continue that way or not, I'm not sure, but that's the way it looks like to me. So if you have any questions, it's 877. Oh, it doesn't make any difference. Al just told me that the lines are just, they're just backed up. We're just trying to squeeze somebody in as we can, but you might try 877-927-6648. Now we want to take a look here at this oil market. Here's another one that responded to the news. You'll notice that big spike that we had here on January the 8th. When we had the altercation over there with Syria, and you'll see the market has dropped over $8 a barrel. We went from 65 down to 57 and change, 56. Yeah, 56 and change, I believe, today, and that was very close to that major support down there at the 78% level. But any move in oil where you get a nice $2 or $3 barrel rally look to be a place to try to find the pattern to get short, folks. That's a very, very bearish pattern. When you've got very bullish news and the market reacts exactly the opposite of that, that tells you that there's something seriously wrong, and you certainly don't want to get involved with that. Now, we were talking about bonds once before. I wanted to bring up the Treasury notes also to show you the bearish pattern that we have here in the notes also. You'll notice the notes rallied more than the bonds did during the altercation with Syria. We went back and matched the high in December. Since that time, we have sold off quite a bit. This market is still bearish unless we can get it above the 130 level. Then there's a possibility that rates could go a little bit higher, but I don't believe that the market is going to go to negative interest rates. But with the Fed pumping in whatever they want to pump in, it really, you can do whatever it wants to. That's the main thing, to pay attention to. Now let's go back across the pond one more time, back to our old Boris. He calls it like it is, Johnson. We'll bring this up here and take a look at it. You'll be able to see here that the pound had a major double bottom here at the 120 level. This is when Brexit was supposed to be falling apart. He came in, saved the day, went up to a 61% retracement there at 135, immediately broke 5 handles down to the 125, 129 level, and we're looking for key support to come in here at around the 129 level. The reason why that's important is it's going to be near the old highs, and it's also a 382, which is a reciprocal of 0.618, and you'll be able to see that that should be strong support at 129. Anything below 128 would tell you that this is not going to be very, very important. If you look at this British pound this chart very closely, look at the far left upper corner there where it says BP weekly. You'll see that 0.63. That's equivalent to that 0.61 that you had at 135. It was just following Fibonacci ratios back up again. The market is in a downtrend, and now we're correcting. This double bottom could be extremely important in the pound, folks. That low that we made back there in January, remember on Brexit, on June the 27th of 2016, folks, we had a market that traded at 150 in the pound. It went from 150 all the way down to 119. We happened to be short that day. We were very lucky. That was one of the better trades we had last year or that year in the British pound. But these numbers, they don't work all the time, but when they do, they're pretty significant. That's the main thing. Well, we've got 12 minutes to go in the market. We're probably screaming. We did. We had we had a heck of a run here in the NASDAQ here. We jumped about 20-some points here. 91. We got up to 91.27, and the S&P got all the way up to 314. So we're really rocking and rolling over there today. So it's going to be interesting to see if we get some follow through tomorrow as the market continues to make these stronger highs. But, there's going to be some volatility in here. There'll be some profit taking. Mainly there might be, maybe a half a day where the market sells off 3 S&P points or, something dramatic like that, down to where the 200-day moving average crosses the 400-day moving average. Always an important fact to look at. All right, we've had a question, and I'm going to try to answer it the best way that I can. I have to go to the futures market to show you that, and if it's going to be about the hog market with all these things that's going on in hogs, we'll just get this up here to take a quick look at it. We wanted to be a buyer of hogs down around that 73.60 level. It hit that exact number on Monday, and we've rallied 5 cents to get up to 76 and change today. So that's a very nice pattern that held. All that was doing was telling you support and resistance. That's all that was doing. Another one to keep on your watch list, folks, is I want you to pay attention to, most of you like a cup of joe once in a while, but if you'll take a look at the coffee, you'll notice here this was as of Sunday. We were trading at 116, and we believe that 61% retracement at 111 is going to be very, very important. because that's the first one at 382 did not hold it. The 50% didn't hold it. So you just buy it at 111 and put a stop at 109. You got to risk 2 cents. But if it's right, and that's an ABCD pattern. If you look at it really closely from the high we made at 142, folks, the Tiger Den down there in October. This is because I'm in there every day, so I know what's happening. But in October, there are 4 or 5 people in the Tiger Den that were recommending buying coffee at 92 cents a pound. It rallied 50 cents a pound, folks. That's a lot of money. 50 cents a pound at 400. That's 20 grand. 20 grand move, and the margin on it is almost nothing. So that's a heck of a move. So watch it pulling back here, because that's a major move. That would also be a 135 pattern. So we'll take a break. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, we're back, and I wanted to give you just a little bit of a teaser here to see if this works or not. It's a $500 stock, but I want you to take a look at this. This is the kind of thing, if I were trading stocks, and I'm not, I just want to show it to you so you can take a quick look at it. Just get it up here, and you'll be able to see it very, very quickly. It is Tesla. And if you wanted a low-risk place to be entering Tesla, you have a chance to do it. Ooh, if I can find the chart now. There's the secret. Don't have it, so we'll have to move on to, there it is. Hold on a second. And then I also want to cover Bitcoin. Here is the 15-minute chart here on, I believe it's 15 minutes, 15-minute chart on Tesla. You see the gap down. We went up and tried to fill the gap exactly at 382. It was a sell at 1513, and you put a buy stop at 1516. You can trade a $500 stock for $6. That's about as cheap as you're going to get, 0.001%. So we'll take a quick look at it. We got coffee at 112.58. We want to watch that, Bob, because we are right near the number 111. So that'll probably come in tomorrow. So Monday morning, we want here on our show here early in the morning at 9 o'clock, we'll certainly be watching that coffee for sure. That'll be a very interesting one. I always tell the folks here at TFNN to try to help the folks that don't have anything else in their lives, so help people that have a lot less than us, because we are certainly blessed with all the wonderful friends and health and everything that we have here at TFNN. So try to help the people that really need it. It's very, very important. So we'll see. We're closing here with a vengeance here. We got as high as 91.35 in the. We're moving very, very fast too, folks. We got up to 1650 in the S&P, and that'll be an interesting one. We've had a heck of a run here. We rallied 40 points in the in the Nasdaq here in the last 30 minutes, and we've rallied about 15 handles in the S&P here in the last few minutes. So keep an eye on that. It's going to be very interesting. So live every day in an attitude of gratitude, and may God bless.